Welcome back, fellow investors, to another insightful episode on CHAT ETF, where we decode the world of exchange-traded funds and bring you strategic insights for building a resilient and diversified portfolio. In today's episode, we're delving into the realm of essential ETFs, those that encapsulate industries standing the test of time. Buckle up as we explore three noteworthy ETFs, each offering a unique perspective on stability and growth. But before we dive in, don't forget to hit that subscribe button and ring the notification bell, so you never miss out on our deep dives into the world of ETFs. Let's get started. In the ever-evolving landscape of financial markets, long-term investors often seek stability and resilience in their portfolios. One approach gaining traction is the inclusion of essential ETFs, investment vehicles that hold stocks in industries deemed indispensable and likely to withstand the test of time. In this article, we delve into three notable essential ETFs that bridge the gap from pharmaceuticals to agriculture and energy, offering investors a diversified strategy for long-term growth. VanEck Pharmaceutical ETF, PPH. The VanEck Pharmaceutical ETF, PPH, stands out as a robust investment vehicle within the healthcare sector, amassing an impressive asset under management, AUM, totaling $415 million. This notable financial strength not only underscores the popularity of PPH, but also highlights its resilience as a stalwart player in the pharmaceutical domain. One of the key factors contributing to PPH's appeal is its commendable expense ratio of 0.36%, a factor that enhances its attractiveness to cost-conscious investors. This relatively low expense ratio makes PPH an efficient and cost-effective choice for those seeking exposure to the pharmaceutical industry. Comprising 26 meticulously chosen holdings, PPH adopts a focused approach to pharmaceuticals, reflecting a strategic investment philosophy. The carefully curated selection of holdings suggests a commitment to quality over quantity, aligning with the idea of precision in portfolio construction. This focused approach can provide investors with a more concentrated exposure to key players in the pharmaceutical sector, potentially enhancing the fund's performance. In the current era where health and well-being are paramount concerns, the pharmaceutical industry has solidified its position as a cornerstone of societal needs. PPH, with its specialized focus on this crucial sector, emerges as a compelling choice for long-term investors. The ongoing global emphasis on healthcare and medical advancements further underscores the enduring significance of pharmaceuticals, making PPH an attractive option for those seeking stability and growth in their investment portfolios. In essence, the VanEck Pharmaceutical ETF, PPH, distinguishes itself through its substantial AUM, favorable expense ratio, and a carefully curated selection of 26 holdings. As a strategic investment in the healthcare sector, PPH aligns with the growing importance of pharmaceuticals, making it a compelling choice for investors with a long-term perspective and a keen eye for stability in their portfolios. Invesco DB Agriculture Fund, DBA. Within the crucial domain of essential industries, agriculture asserts itself as a fundamental pillar supporting the very fabric of societal sustenance. The Invesco DB Agriculture Fund, DBA, exemplifies this significance, managing a substantial asset under management, AUM, of $813 million. This financial prowess not only underscores DBA's prominence within the agricultural sector but also positions it as a formidable choice for investors seeking exposure to the enduring importance of agriculture in the global economy. Despite its relatively higher expense ratio of 0.93%, DBA offers investors a gateway to a diverse array of agricultural commodities. While the exact number of holdings is not explicitly specified, DBA's approach of providing exposure to a broad spectrum of agricultural assets aligns with a comprehensive strategy. This diversified exposure can be particularly advantageous in navigating the complexities and fluctuations of the agricultural market, contributing to a well-rounded and resilient investment portfolio. As the global population continues to burgeon, the demand for food and agricultural products remains robust, underscoring the essential nature of the agriculture sector. By strategically incorporating DBA into a diversified investment portfolio, investors position themselves to capitalize on the enduring significance of agriculture. The fund's focus on essential commodities reflects an understanding of the pivotal role agriculture plays in meeting the escalating global demand for sustenance. In essence, the Invesco DB Agriculture Fund (DBA) stands as a noteworthy investment avenue within the agricultural sector. Its substantial AUM, although accompanied by a slightly higher expense ratio, signifies the trust investors place in the fund's ability to navigate the ever-evolving landscape of agricultural commodities. By embracing DBA, investors not only gain exposure to the diverse facets of agriculture but also align their portfolios with the resilient and vital nature of this sector in the face of evolving global demographics and economic dynamics. Fidelity MSCI Energy Index ETF, FENY. Navigating the dynamic landscape of the energy sector requires strategic choices, and the Fidelity MSCI Energy Index ETF, FENY, emerges as a standout player with an impressive asset under management, AUM, of $1.64 billion. What sets FENY apart is not only its substantial financial backing, but also its remarkably low expense ratio of 0.08%. Making it an appealing option for cost-conscious investors seeking exposure to the energy market. With a well-diversified portfolio, comprising 116 holdings, FENY offers investors a comprehensive exposure to a broad spectrum of energy-related companies. This diverse approach reflects a nuanced understanding of the multifaceted nature of the energy sector, enabling investors to navigate the intricacies of this dynamic market. The fund's expansive holdings encompass various facets of the energy industry, providing investors with a strategic blend of opportunities for long-term growth and resilience. In the midst of a global transition towards sustainable practices, the energy sector retains its status as an indispensable component of modern living. FENY, with its explicit focus on the broader energy market, positions investors to participate in this ever-evolving sector. The fund's emphasis on the MSCI Energy Index ensures that investors gain exposure to established and emerging companies, allowing them to capture opportunities arising from technological advancements, regulatory changes, and shifting consumer preferences within the energy landscape. Crucially, FENY provides investors with the means to engage with the energy sector while maintaining a long-term perspective. As the world grapples with the imperative to balance energy needs with environmental sustainability, FENY's strategic positioning within the market offers investors the potential for enduring value. By incorporating FENY into their portfolios, investors not only align themselves with the resilience of the energy sector but also position for growth in an industry that remains integral to the modern way of life. For long-term investors seeking stability and resilience in their portfolios, essential ETFs present a compelling option. The VanEck Pharmaceutical ETF, PPH, Invesco DB Agriculture Fund, DBA, and Fidelity MSCI Energy Index ETF, FENY, collectively offer exposure to industries that are integral to the fabric of society. By strategically incorporating these ETFs into a diversified portfolio, investors can position themselves to weather market fluctuations and capitalize on the enduring significance of essential industries. As the investment landscape continues to evolve, these essential ETFs serve as a beacon for those navigating the path to long-term financial success. And there you have it, fellow investors. We hope you enjoyed this deep dive into 3 essential ETFs that could add robustness and stability to your investment portfolio. If you found value in today's content, don't forget to give us a thumbs up and share your thoughts in the comments below. What ETFs are you currently eyeing? Let us know. If you haven't already, make sure to subscribe to CHAT ETF for more content that empowers you on your investment journey. Until next time, happy investing.